The outbreak of COVID-19 has affected the global economy, including the housing market. Joining me today to talk about mortgages and what homeowners need to know is Bob LaPointe, who is a senior loan officer at Movement Mortgage. Thank you so much for joining me, Bob.
Yeah, thanks for having me, Paula.
So, Bob, millions of people are out of work and they're unable to pay their mortgages. I know there are a lot of options out there. People are talking about so many different things, but nobody really knows what is going on and what the options are out there. So, could you tell us what are the options?
Yeah, and things have been moving so fast and the market's been moving so quickly. The administration's been trying to feel their way through what's the right thing to do, how do you implement it, and then how does the banking industry go about actually putting it into place. So one of the big topics that has been in the forefront lately is about forbearance. And there's been a lot of different opinions about what forbearance is. Historically, forbearance was put into place to help people not go into foreclosure in years past. So what would happen is if somebody was behind on their payments, the bank would put together a program where they would take out that block of money that they were past due on, and they would separate that in an agreement and say, along with your regular payment, either A, you can pay a slightly higher amount until that is paid off, say within a 6-month period, and then that forbearance agreement would go away. Or what would happen is the folks would continue to make their regular payment, and at the end of that forbearance agreement, they would pay the lump sum amount to make the forbearance go away. And that's how a lot of people had known a forbearance up to this point. So that's what's created a lot of concern and a lot of different opinions.
Does it work the same way now, though? No.
It is not. It is not working the same way, actually. There's varying ways that it's being done. Fannie Mae, Freddie Mac said that, and they're the insuring entities for conventional type loans. So on their loans, they're saying somebody can do a forbearance agreement up to 12 payments, and they'll allow at the beginning up to 6 and then reevaluate it later. There's a lot that goes in behind the scenes that can potentially negatively impact a borrower, even though it's been designed to positively help them to bridge this gap that people need to be aware of in doing it. It's the payments, it's not a free ride. It's not that they don't have to worry about it. And they also have to.
I think that's what a lot of people were thinking in the beginning, because they were saying you don't have to pay your mortgage because they're going to tackle it on at the end. But then you heard reports of, no, that's not what's going to happen. You have to, if you're not going to pay the first and second month, then you have to pay everything. And people were freaking out going, oh my God, if I don't have the money to pay the first and second month, how am I going to have money to pay 3 and 4 months at the same time? So.
Yeah, it's a challenging thing to manage around because it's changing the environment of how it was initially created in a banking system, where systems are set up, credit reporting agencies' algorithms are created based off of a historical way of looking at it. So with things moving very quickly, and due to no fault of the messengers in the past over these past few months of trying to run with it too, there's been a lot of uncertainty with it. And there still is some learning patterns that we're all going through with it, because we found out some of the clients that have come to us for financing had actually only called their lender to inquire about it, to get information. And when they inquired about it, the lender automatically put them in it and they didn't even know it. So when they were applying for financing to get a loan, they were showing on the credit report already in a forbearance program. And if you're in a forbearance agreement right now, you can't get financing.
Right.
It doesn't differentiate on the credit report, COVID forbearance versus a forbearance. So some things to keep in mind are, first off, when you do call your lender to ask if you need it, make sure and let them know you're only inquiring. You don't want to go into the program yet. You only want information to be able to make a decision in the future. Only inquiring. And then get the information about what that program will look like for your particular lender. And understand, though, that a forbearance is something that you want to do as a last case scenario, because it will have some negative impacts on your ability to borrow if you're looking to borrow right now or in the near future.
Right. And each lender has a different policy, different way of doing things, correct?
They probably have a different understanding because there's not a manual that went out from from the CARE Act or from FHFA on any of this. It's really just been talking about quickly, lenders trying to do it to try to help borrowers to bridge this gap so they don't lose their home. A lender's not looking at it to say, all right, let's educate them and really make sure that it keeps their credit score really high, makes it where they're, lendable in the future. It's about, let's help bridge the gap so they can keep their home, make it where they can feed their family and not have to worry about these things.
So
And
can they issue foreclosures or evictions right now?
no, not right now. They cannot. Even from evictions, a landlord is not able to evict in this time period. It's holding things off. And the same with the foreclosure side of things. It's pushing off foreclosures. I know in the past they were saying that it was going to push it off at least 60 days. And I'm not quite sure where that part of it is as we stand now.
And you have a program that's called Frontline Heroes. Do you want to talk about that and tell us
Yeah.
what that is?
Yeah, it's one of the things that, and it literally just came out and we want to get the word out to people. So one of the things that we want to do is we want to be able to help and say thank you and reward the people who have been putting themselves out there on the front lines with the people that more likely than not have the coronavirus, and they're taking those chances on a daily basis. It's easy for us to sit home and feel sympathetic and say, oh my God, I'm really appreciative for what they do. But to go through that on a day-to-day basis and really put yourself and your family at risk, we want to say thank you and reward people for that. So we came up with this program. If someone qualifies for the program who is a hospital worker, EMS, full-time police officer, or full-time firefighter, they're eligible for the program. And what the program allows for is $2,500 of credit toward the closing costs, escrows, or whatnot, which is a true credit back from us, the lender. And it's something that is available for the people that fit in that program. The program is effective for people that apply between May 1st, 2020 and June 30th of 2020. It's a 2-month program, and it's eligible to be used for conventional owner-occupied programs and all government programs like FHA, VA, or USDA. It's a really good program for people that are looking to either buy a home or to refinance a home.
And let's talk about buying and refinancing homes. Is now a good time to do that because of the interest rates being so low?
It is. Interest rates right now are at historically low levels. To determine whether someone should refinance or not will depend on where they're at right now. If they're just looking to refinance the existing mortgage they have, it's a great opportunity right now for people that have equity in their home to consider a cash out refinance, to combine all of that debt into some of the lowest rates they'll ever see, to be able to help speed up the repayment term or just get payment relief. We have programs where we can look at ahead of time and put together a simulator to show whether there's a benefit to do it or not. And it doesn't cost anything to look at to get that idea as to what you can do.
What about for closings, for example? Because now we're doing everything virtually, so you cannot be face to face. But I know that a lot of these documents with loans and banks, you need to be face to face and you need to sign them and have a notary. How does that work?
In any of the processes in this, and I also want to say this as well, people right now have a great opportunity to buy that need to. People have a great opportunity to sell that need to. Because in this environment, it's put all of us in a position to where we've really changed our processes so that we can do things remotely, so that people can stay safe in the process. And with the attorneys and those that are closing, they've implemented processes where they only allow the people that have to be at the closing to come to it. So a borrower, when they come to sign the papers, go into the room. It's been sanitized, cleaned. There are brand new pens. The pens are never used twice. The room is cleaned. The attorney brings them in there. They're using masks. They're doing all of the necessary things. So they separate the folks that need to be there in a safe way and make sure that the environment that they're in is a clean and safe one.
Oh, good. Bob, is there anything that I have not asked you yet that you would like to share with the viewers?
The other thing to keep in mind too, in this market with all that's going on right now, there's been a lot of guideline changes. There's a lot of things that go on behind the scenes. We hear a lot of opinions about what affects the interest rate. Oh my God, the Fed dropped it to 0%. Let's hurry up and call our bank. We're getting free money.
There's nothing free.
Yeah, nothing is free. So with all of this, there's been a lot of restrictions, and it's for another conversation because it's such a lengthy topic, but forbearance agreements have created potential liquidity problems for lenders, because when a forbearance happens, think about it this way. Somebody has an escrow account with their mortgage. They have taxes that come due at the end of the year. If you're not making mortgage payments during that time, when your taxes come due to be paid, the money has to be in the account to pay it. If a forbearance agreement's in there, you're not making the payments, right? So the money's not in that account to pay it. It creates a couple of challenges with that. From a liquidity standpoint, lenders and the secondary market are, having some concerns that with the forbearance, with the amount of people that are taking advantage of the forbearance program, about 5% of the loans out there are taking advantage of that as of right now. That means the loans that they had, those monies are not coming in, and a bank takes money in and relends it out. So not knowing how many people are going to go into a forbearance has a lender concerned with how the liquidity will be from the monies that they have versus what they'll be able to lend in the future in those programs. So we've seen in some cases, a lot of lenders have tightened their guidelines on some of the more challenged files because they don't want to find that they make a loan that's going to require somebody to have challenges to start with. So you'll see some lenders where they've tightened loan to values, they've tightened that what's called debt to income, the amount of debt you have compared to your income. They've put minimum credit score requirements above what they need to just to protect themselves. We've been very fortunate. We haven't had those extra guidelines that we've had to impose. We've been in a very good position and continue to be that way. So moving forward in that sense, although we've had to make a few changes, they're very few and very limited. You can still see folks with a lower credit score still have the opportunity to buy homes. But the important thing is to get the facts, check the information. And the good thing about it is it doesn't cost a penny to talk and get the information. I'd encourage them to check on that.
And if you have money, pay your mortgage.
Yes, use the forbearance as a last case scenario. If you can do without going into a forbearance agreement, tighten up and do it. But if you can't, it's there for you, and it'll be there to help you bridge through that gap.
Bob, thank you so much for joining us today.
Yeah, thanks so much for having me.
And thank you for joining me for this interview. Be safe and stay home.